December's job report may look strong on the surface, but a deeper dive reveals cracks forming beneath the headlines. Private payrolls rebounded but fell short of expectations, and broader labor data continues to point toward a cooling job market. Good afternoon. We kicked off the year with another eventful week in the markets, this time driven by the bond market. The week opened with the 10-year Treasury hovering around 4.18%, but momentum shifted late last week as mortgage-backed securities saw a significant surge. That move was sparked by a statement from President Trump on Friday calling on his quote-unquote representatives, referring to Fannie Mae and Freddie Mac, to purchase up to $200 billion in mortgage bonds in an effort to push rates lower. The market reacted quickly with bond values jumping and mortgage rates falling to their lowest level since 2022. Now, while we did see some pullback yesterday as investors took profits, the bigger picture remains encouraging, with momentum continuing to favor lower mortgage rates. There's a lot more to unpack from last week, so let's dive in. Here are your headlines. In the labor sector, December's jobs report from the Bureau of Labor Statistics showed that 50,000 jobs were added, below the expected 73,000. The unemployment rate moved down from 4.5 to 4.4%. So what is the big takeaway? While the headline number appears mixed, revisions remain a key part of the story. Payrolls in October and November were revised lower by a combined 76,000 jobs, and it will be important to see whether December's already modest gain is also revised down in the months ahead. Additionally, the unemployment rate was revised higher in 3 separate months last year, suggesting more underlying labor market weakness than initial reports indicated. The majority of December's job gains came from healthcare and social assistance with 39,000 jobs, and leisure and hospitality with 47,000 jobs. Healthcare hiring tends to be steady and less sensitive to economic cycles, while leisure and hospitality typically sees a seasonal boost in December due to holiday travel. Excluding these sectors, overall job growth would have been negative once again. Now, after shedding 29,000 jobs in November, the private sector added 41,000 jobs in December, according to ADP. Although the gain came in slightly below expectations, small businesses rebounded modestly, adding 9,000 jobs, while medium-sized firms led hiring with 34,000 new positions. Large employers showed little momentum, adding just 2,000 jobs overall. Job growth was uneven across industries, with 3 of 10 sectors reporting job losses. Education and health services saw the strongest gains, followed by leisure and hospitality, likely to reflect seasonal hiring tied to the holidays. Wage growth continues to favor job switchers, which pay up to 6.6% year over year, compared to 4.4% for workers who remained in their current roles. So what is the bottom line? December's rebound in private payrolls offers some short-term relief, but the trend remains weak. The 12-month average stands at 51,000 jobs per month, compared to with just 20,000 over the past 3 months. Over the last 5 months, private payrolls have increased by only 27,000, which highlights a clear slowdown in hiring momentum. Beyond payrolls, other labor market indicators continue to point to cooling conditions. Initial jobless claims rose by 8,000 to 208,000, while continuing claims increased by a larger 56,000 to 1.914 million, and have remained elevated for much of the past year. Together, these trends suggest a low fire, low hire labor market. Job openings in November also declined more than expected, falling from a downwardly revised 7.45 million in October to 7.15 million. This figure may still be overstated true demand, as many remote positions are posted across multiple states at the same time. A weak hiring rate of 3.2% and a low quit rate of 2% point to a softer labor demand and reduced confidence among workers to change jobs. Meanwhile, Challenger Gray and Christmas reported 35,553 job cut announcements in December, the lowest level in 17 months. However, for all of 2025, employers announced 1.2 million job cuts, the 7th highest annual total since 1989. Hiring announcements also fell to their lowest year-to-date level since 2010. This week is another big one for the markets, with the middle of the week loaded with key economic reports. Today features updates on consumer inflation and new home sales, followed by wholesale inflation, existing home sales, and retail sales on Wednesday. I'll be filling you in on what happens this week on Tuesday, but for now, have a great rest of your week.